The latest crash in the stock market have presented several buying opportunities. Hello everyone, welcome back to the channel. Today I wanted to talk about 6 stocks that I believe are undervalued or a complete buy for my portfolio right now during current market conditions. If you're new to my channel, welcome. Please, I would really appreciate if you smash that like button, as it would help me a lot and it's completely free for you. Something Warren Buffett has said many times is that the best thing we can do as investors is to buy a stock that you will never want to sell. A stock which you feel comfortable with, that you understand their business, their products, a stock which you feel comfortable and secure by investing your money into that company. An example for that, for me, about that kind of stock is Apple. As I understand their company very well, I have tried almost all of their products. I find the ecosystem that they have created amazing, the growth as a company and continuous innovation. It is a cash machine and dividend stock as well. With all that said, let's talk about 6 stocks I believe are a good price right now and that are companies that can make you feel comfortable by investing in them. The first stock in the list is my biggest position at the moment, which is Amazon stock, ticker symbol AMZN. We all know that this is an e-commerce king. That stock is right at $3,000 and I have been adding for the past 2 months. As we can see, it is down almost 10% and it got as low as $2,700. In my opinion, Amazon is an undervalued company right now, given the enduring growth trajectory and long-term potential. The stock price has barely gone up since summer 2020, even though Amazon's top and bottom lines have continued to expand. Analysts are expecting them to report a revenue growth of 15.20% for 2022 and 17.39% for 2023. The company has a market cap of $1.56 trillion and a PE ratio of 47.46, which we can see has been in a downturn since 2017. Now, something I love about Amazon is their diversification of businesses. Their web service business is doing excellent. They started 2021 with big growth opportunities in different businesses and have been getting involved in the healthcare service industry, which if they are able to deliver a more efficient one, for example, the potential is gigantic. Their advertising business is growing, as we saw how about half of US adults starts their search with Amazon. Currently, Amazon represents 24% of my portfolio, which I know is a lot and have been decreasing by adding in other positions. But I'm currently up 77% on my position, which is why it is such a big position as well and have an average cost of $1,732 per share, even though I have been adding. Second stock in this list is actually a list of 2 stocks as they are pretty similar. And these are Block, or Square as we used to call it, and PayPal, even though I don't believe everyone will call it Block anytime soon. PayPal is currently down 64% since its peak for several reasons, meaning that it is up 27% since the market crash in March 2020 during the beginning of the pandemic. Basically, it raised all profits from the past 2 years, even though the company continued growing. PayPal is a massive profit machine with a nice growth expectations in revenue and earnings per share as well. Something that caught my attention is that both PayPal and Square have kind of a monopoly within the mobile payment services with Venmo and Cash App. Talking about Cash App, the other stock I'm looking at right now is Square or Block. I do have to say that I had this video planned out before their earnings when the stock was $88 per share. One of the things I'm analyzing a lot and I like is their Afterpay deal. This deal was originally valued at $29 billion, but with a big Square stock drop, the deal was valued at less than $15 billion at closing. This gives Square the possibility to be one of the leaders in the buy now, pay later businesses. I do have to say that I understand the risk it is to invest in both of these companies, as they are very involved in cryptocurrencies. For example, 50% of Square revenues comes from crypto, which means that most of its growth comes from that. Analysts are expecting a growth of 86% for 2022, but their 2023 expectations are really low. But it has a 4P of 52, just like Amazon, and a price to sales ratio of 3.17. I'm currently investing in Square, but not in PayPal yet. Still, I would wait for Square to calm down a little bit from last week's huge explosion when the stock went up 23%, as I would buy below $110 per share, but I have bought before at $114, for example. Stock number 3 is the most used internet browser, email search engine, video platform, navigation platform, Alphabet, mostly known as Google. It is currently trading at $2,689 per share with a market cap of $1.7 trillion and a PE ratio of 23.97, which we can see is really low historically speaking with Google. It is also expected to report a growth of 18% this year and 15.10% next year, with a nice growth in earnings per share as well. This is another well-diversified company in which I only invest in my M1 Finance portfolio. They just announced a split a month ago, which should not be a reason for why to invest in the stock market, in this stock, but I know it plays a game in the psychology of investments for retail investors, as now the stock will be at $130 per share instead of $2,600. I do have to say that between the FANG stocks was the best performing one in the past year, just with Apple, as both are up about 33% in the past year. The next stock is a risky one, a risky play in my opinion, but it is a stock that I invest in. The only risky one I will add in this list, and this is Fubo TV. It is down 76% in the past year with a market cap of $1.3 billion and a price to sales ratio of 1.92. They reported a revenue of $231 million for Q4 2021, and notice that engagement continues to be strong as they add differentiate content to their offering and focus on innovating their product to meet consumer preferences and drive a premium experience. Still, they are expected to see a revenue in North America streaming business will be between $232 to $237 million in Q1 2022 and $1.08 or $1.09 billion for the whole year. So remember that their market cap is at $1.3 billion at the moment. Next stock in this list is Disney, ticker symbol DIS. Disney had a rough 2020 and 2022 as all of their main businesses were closed during the pandemic. Still, they continue seeing growth in their other businesses such as Disney Plus. It is currently trading at $149 per share, and I would buy more at around $130. It currently has a market cap of $272 billion, and analysts are expecting this company to report a growth of 26% for this year and 11% for 2023. I currently have a position in this stock, which is currently up 8% at this moment, with an average cost of $138 per share, and it only represents 3.79% of my portfolio. I believe that now that their hotels and theme parks and cruises are opening more and more, they will continue seeing growth. Last stock in this list that I don't invest in yet and have still to do more research on is Nvidia stock, which is currently trading at $241 per share with a market cap of $601 billion and a PE ratio of 61. This company is definitely within an industry worth looking at, which in my opinion has huge long-term potential as an industry. I still need to do more research on this company as I used to track it more often, but to be honest, I don't really know why I stopped. Still, it is one that attracts me a lot, and I will most likely post a video about it. Now, all these are not financial recommendations or investment recommendations, are stock that I believe are at a good price right now to buy, that have been having nice growth and that I feel comfortable investing in. Again, as Warren Buffett said, these are stocks that I would like to buy and never sell. The question here is, which is that stock for you? Let me know in the comment section below. I will leave you here a video recommended by YouTube and here for you to subscribe, which is completely free and will help me a lot. Thank you and see you next time.